Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. Do not keep any more funds than you need for trading on any single exchange. The whole point of leverage is to reduce your counterparty risk by allowing you to trade your full position sizes without having to keep all of your collateral on the exchange. If you want to support the show, consider signing up, but please read our long form article first, and as always, diversify your counterparty risk and only incur it if you must. So with that out of the way, let's talk about the market. We have 3 days left until the monthly close. It looks likely that we'll have a lower low close on the monthly. That is most evident on the line chart, where if we close around this area, it'll be a lower low relative to the last one. And on the candlestick chart, pretty self-evident case of the close being lower than the last down month that we had. So that would be a kind of soft breakdown, I guess, in my system. And on the monthly time frame, the targets for that breakdown, should it continue, would be conservatively the swing low from June. And then if we extrapolate to higher time frame monthly levels of support, that's 23K to 20K. So yeah, not the best monthly view, but that should be rather unsurprising. And this stuff takes a while to play out anyway, but just so we have some higher time frame grounding, this isn't necessarily a signal if it breaks lower and closes like this. Again, I see it as a soft market structure break that implies that, or at least suggests that bears are more in control than bulls, or is a general sign of weakness. Now, the weekly time frame is still glued to this interim range low we talked about at some point at 25.9, 26K. We've had some bounces from there, nothing too strong yet. Given how the monthly time frame looks, my base case, if the market does start to bounce, is not for a full-on reversal, but rather for some sort of weak bounce before continuation lower. I just think these, large structure breaks don't V-reverse immediately, so a shallow bounce is completely acceptable and reasonable, but I think extending beyond that is unlikely. So, of course, this raises the question, where might one reasonably expect for this to meet resistance if it does bounce? And I think if we go back to that monthly and outline that same monthly level as we did last week, it takes us to 27.2. If we look on the weekly time frame where that 27.2 falls, it's more or less in the middle of the pre-reversal range. So if we look at the drifty downtrend that we talked about on the way down, where you had high, low, lower high, lower low, lower high, lower low, and then ETF candle. So that's where market structure shifted, and we had our reversal from the downtrend. So then I can look in terms of recency, what was the last sort of meaningful range before the market reversed? And to me, it would be this sequence of low, high, breakdown that didn't continue, ended up being a point of reversal. So that range for me is significant. So if we add some levels to that, the lower boundary of that is at 26.7, and the upper boundary of that is at 28, right? And then an imperfect midpoint we can get from our monthly level at 27.2. If you wanted the actual midpoint, it would be around 27.4, but I think a $200 difference is largely immaterial. So what we end up with on the weekly time frame is price is still respecting local support at 26. I just wouldn't give it too much weight, and if it bounces, I'd expect that bounce to be met with resistance. I should preface this with two things. The first is that the market is still pretty dead in terms of inflows, outflows, volatility, etc. And I would also mention that the market is very likely to overreact, or at least react very aggressively to whatever ETF news that we do get. I think it's something like every Tuesday and Friday at 11 Eastern. Any of those on any given week, we might get the SEC grayscale case, and I think that's where the next large move is going to come from. So to be completely candid, there's probably more edge in setting up your sort of data scraping terminals, news feeds, and fast execution parameters, and being ready for the news trade, more so than spending time looking at technical levels, because it's very likely that the market will react very violently to that news, and your local support, if the news is bad, is going to get crushed, and your local resistance, if the news is good, is going to get crushed as well. So there's probably more edge and more alpha in spending time making sure that you're well set up for that eventuality, rather than trying to trade whatever this thing is, okay? So with that disclaimer out of the way, we can return to our technical levels, but we don't really have that many of them. So even looking at the daily time frame, post-breakdown, the price action has been quite miserable. Look at how small the candle bodies on all of these candles are. And we essentially since then had a push to the downside that went nowhere and a push to the upside that went nowhere. And we're stuck right in the middle. This is by definition untradable if you trade technical levels. I mean, I'm sure there's someone making money on this, but for our purposes, where we like to do business at extremities, the market is by definition not at an extremity. And even if it were in this context, the range itself is quite narrow and quite miserable. But, you know, grant whatever you may, this just isn't good. This doesn't make for particularly good trading conditions. And even if you were to be awfully charitable and draw a range within this, it would still be in the middle, and that's not anything interesting, frankly. So that's what we have on the daily time frame. That same 27.2, 27.4 level is visible on the daily time frame and is relevant up here. So this is kind of the daily trouble area where I would expect weak bounces from support to find resistance. But again, this proviso of the market is going to really, in my mind, overreact or react violently to the ETF news. That's probably the guiding driver. So realistically, just to give you a sense of scale, maybe 75 to 80% of my analysis and just general thinking about the market is essentially assuming a knee-jerk response to the news, and whatever percentage is left is focused on technical levels. So they are not the priority at the moment, and I think that's a reasonable approach. It would insult your intelligence to go on any other lower timeframes, try to read more into this. I think we know the big picture. The monthly looks heavy for the time being. The weekly is holding a local level. Resistance is above us in the 27s, but you know, could get significantly undershot or overshot if the ETF news skews one way. And then on the daily time frame, same picture. You can get a clearer view of what that monthly level looks like, but still, I think, beholden to low volatility until such time that we get that ETF news, or if the market just naturally rolls over on some other headline. I think it's one of those things where the market doesn't really need a reason to go down after this type of impulsive move. And just the general environment of low volume, low volatility, stablecoin outflows, you know, I think the heavier hand is with the sellers, if you will. But in order to go up, I think we will go up meaningfully. I think we will need some good news, ideally on the back of some ETF-related shenanigans. And I think at that point, once we get an ETF decision, eventually, you can throw out your short-term technical levels and it'll just be a pure momentum and news trade, which is why it's kind of hard to make this show for the time being, because, you know, the levels themselves are whatever. And I think there are much stronger, great English, much stronger forces that the market is waiting for to kick in before choosing its direction. So yeah, just keeping it completely honest with you, you know, what matters in the market changes. And at the moment, what matters in the market is every Tuesday, Friday at 11 a.m. Eastern, everyone's looking out for that ETF headline. And that's probably going to be the next big trade on BTC. So that's my view at the very least. As far as ETH goes, not much else to say. I mean, unlike Bitcoin, it has failed to hold a weekly level. You know, if we look at this 1600 range high, cluster high, whatever you want to call it, initially we had a weekly close above it, especially after a kind of wipeout impulsive week. It'd be nice if the consolidation similar to BTC USD was above it as well, but it hasn't been, you know. Granted, it hasn't rolled over and broken down completely, but on a candle close basis, this still looks weak because the market is currently below that range level. So even if you wanted to be aggressively bullish, I think that argument becomes more tenable above 1700. Then you can make an argument this is deviation, whatever. But that is currently unavailable, and it looks rather weak on the weekly time frame. You know, the next areas are lower, obviously, but it looks like a local level has been lost as well. And the daily time frame is just a quagmire, to be honest. There's really not much here that interests me. You know, if you really tried to force the issue, I'm sure you could delineate some sort of important level. You know, if we draw a big box at 1600 to 1700, you could always narrow it down and take the more, you know, go towards the boundary of 1700. We're still below that. So similar to the weekly, you know, above 1700, the daily time frame starts to look okay. The weekly time frame starts to look okay. You know, the daily and the weekly together kind of align above 1700, but we don't have that at the moment. And again, I still think for centralized exchange, majors trading when it comes to BTC and ETH is primarily going to be catalyst driven. It's either just going to drift lower on its own without anyone's help, or it's going to be catalyst driven. If it's not catalyst driven, I think short-term pops are going to stay range bound within those higher time frame levels that we discussed. So yeah, not a whole lot going on. Again, just to emphasize, I know I'm mapping levels and talking about above, below, etc., but really I'm not expecting too much from the majors until ETF related stuff, and that's probably the next big trade. So just to make that very clear, apologies for being repetitive. As far as the S&P goes, we had the impulsive sell-off, we had a bounce, and the bounce got completely engulfed, and so this might be our new kind of choppy range that we're dealing with between 43.70s and 44.50, 44.60. The only reason we look at legacy is to potentially get some color as to whether crypto is going to be facing headwinds or tailwinds. We've not had any tailwinds for some time from the legacy world. Even when legacy was going up, that didn't help us. When legacy has been going down, we've mostly felt it. This is starting to look quite downtrendy on slightly lower timeframes. So on the daily, ever since the break in market structure here, we've essentially had lower highs and lower lows. And on the 4-hour and the faster moving timeframes, looking fairly downtrendy as well. But it's generally choppy. Again, this is something you look at a glance to see if it's going to help or hurt crypto. It generally still seems to hurt more than help, even when it should be helping. And I think at best, even if you want to make bullish arguments, the best you can do at this exact juncture is chop, because it hasn't really hit any of those really clear higher time frame levels of support quite yet. So no allies in legacy for the time being. As far as altcoins go, there have been some disparate movers. Sui was one of them over the last couple of days. There was also HBAR today and a bunch of other stuff. Curve is always moving one way or another with all its, DeFi shenanigans. One that I've got on my watch list is DYDX. There was a huge open interest ramp that a lot of people tweeted about into a kind of unlock period. And in general, it seems like the meta game for the altcoins in the past couple of weeks has been some version or variant of buy the rumor, sell the news, or in general, just selling altcoins that have gone up asynchronously as a result of some news or narrative, and then letting them bleed out back to where they came from. It happened with OP, it happened with the Litecoin halving. I'm sure there are other examples. Shibarium is at Shib, and Shibarium launch is another one. And so DYDX is on my radar for similar reasons. And the basic argument would be really aggressive sort of expansion in net positioning and open interest into the highs. Looks like there was a TWAP running on it if you look at CVD, and in general, just aggressive participation into a key level with a catalyst driving it that might trap participants on the wrong side. So this is at least on my watch list to see if I can catch a rotation back to where it came from. And the aggression really started around here, which also lines up with a decent technical level at $1.90. So if this is like every other altcoin, then I expect it to make its way back down. If this time it's different, I'm probably just going to leave it and not try to breakout trade this thing. If anything, if it does push through this breakout level, that would just adjust my entry trigger, and I'd wait for it to lose and form a failed breakout at 220 before ultimately going for 190. One thing you can do is to go to velodata.app. I'm not sponsored or registered or whatever. I just talk to the devs and think it's cool as a piece of kit. And you can sort large caps, mid caps, small caps, top gainers, top losers. I generally look at the price changes and I look at the open interest changes just to see the types of participation. So this is just purely for returns, what's moving. And then I look at sort of, where's specifically on the open interest side, I look at sort of outlier increases and outlier decreases. Outlier increases tend to be a bit more interesting. I want to see people expanding their positioning and then seeing if that lines up with support resistance levels or the reason for that type of aggression. Is it narrative based? Does someone know something, etc.? The open interest changes to the downside tend to be either liquidation based or just positions closing in general. So in any case, I'll just sort of look at the outliers on price and open interest, and that will guide some of my altcoin watch list behavior, I suppose. But that's really all there is to it. Thank you for watching another episode. I appreciate the market conditions are less than stellar for us centralized exchange traders. But, I've been posting some educational stuff on Twitter. There's a thread on funding and there's a thread on open interest now, which is potentially helpful. Go take a read there. I'm sure I've got some more content planned somewhere. And as always, thank you for watching the channel. Thank you to Woo for still supporting us, even though it's a tricky time for centralized exchange businesses with volumes and everything drying up. And yeah, have a wonderful remainder of your week, and we'll see you for all the usual stuff, newsletter, Don stream, Casual Friday later in the week. Thank you for watching, and goodbye.